All right. Good morning, Facebook. How's everybody doing? This is Greg Ellie and Steve Lewis. Steve?
Except it's good afternoon, but that's okay.
Okay. All right. Let's redo that. Good afternoon, everyone.
It's usually good morning.
And in French, I'll just say bonjour, which means good day. So bonjour.
And in French, I'll say that's all I got.
Please edit this in.
I'm not recording.
No,
all
he's
right,
not recording
all
it.
right, all
It's just
right.
Facebook.
So we're going to get some interesting comments. And there's a real interesting picture, if you haven't seen, of a certain president in drag.
Former president.
Just that's all I'll say about it. Okay, you read the news. Anyway, that was inappropriate. Maybe not by me, but yeah, anyway. So the fact is, folks, we're about to record our show, and I'm reading an article, and so we're going to get up and running on the show right now. We're going to move quickly, and love your comments. Let us know if you like us, and if you're here watching us, you're probably wondering what we're doing at 4 o'clock in the afternoon or 4:30. So we're ready to go.
That's if you want to tag Steve Lewis.
Yeah, please.
Really?
That's fine. That's a good idea.
Yeah.
Yep.
Go ahead.
Right.
Oh wait, I need to get on Facebook. Don't I?
I'm actually recording on Security First as well, so we do dual, but that'd be great if you tag me. That'd be fine.
So,
Thank you.
Hang on, I'm glad you
There's
said that. Thank
I don't know if you've got speakers going. I feel like I'm hearing a.
You hear some?
I've got.
You hearing that?
No, I've got
You
his
probably hearing
headset
my
off. Maybe
headphones
it's that
somewhere.
one. Is it that one?
It's another. Mine ain't got but one plug.
That's fine. It doesn't bother me. I just didn't know if it was going to mess with anything.
It could. Both of them are turned down
Yes,
to
sir. Yep.
the left.
Yes,
Hey,
sir.
hey, Becky, how are you doing?
Hey, darling.
You're reacting, and I didn't call you that. He did, appropriately so. Just messing with you, Becky. How are you doing?
I wasn't talking about the president in drag, so I'm just saying.
I think she.
Uh-oh.
I think she's writing. Becky, are you flirting with Steve?
Now, wait a minute. Why are you logged into Prosperity Group and you're not into?
It's okay. You guys handle that at
Yeah,
home.
that's a personal thing.
Hey, Julia, how are you doing? It's good to see you. I hope you and Mark and the family are doing well. But this is our financial show that we're doing called the Prosperity Hour. And what's the title of the show today,
The
Angela?
Wall Street Casino
Continues to win.
So
Yeah.
today's show is the Wall Street Casino continues to win. Okay, we're going to start recording our radio.
All right, here we go.
Good morning, listeners. This is Greg Ellie and Steve Lewis of the Prosperity Group, and welcome to the Prosperity Hour, where you learn how to prosper in retirement. And today's show is going to be an unusual show, but it's the Wall Street Casino continues to win. The Wall Street Casino continues to win. Now, if you want to watch our show as we do the unedited version, you can actually go onto Facebook and watch us live on Facebook when we record it, which usually it's on Wednesdays. We recorded this past week on Thursday. And in the edited version, you can go to our website, which is mymoneyissafe.com. I also want to let our listeners know that we're going to be making some major changes to our website. So we may be having a temporary landing page as opposed to our normal website. So I want to let you know that as we go forward. And Carl, thanks for joining us. Multitasking on Facebook and doing the radio show. And Steve, how are you doing this morning? This afternoon?
It's this afternoon, but the listeners are listening in the morning probably.
Well,
so,
some of them listen at night.
That's true. That's true because our times are all
See,
over the
I
place.
could get away with saying good night, good morning, good afternoon, and no one would know.
Bonjour or whatever.
Yeah.
No, I'm doing well, thank you. And just for the listeners, the page on Facebook is Prosperity Group LLC. If you go and like that page, turn on your notifications. You'll be notified when we're going live, and you can, like Greg said, watch the video live, or you can go back and watch archive shows if you want to. You definitely get a whole different spice than what you hear on the radio. Because they get to see behind the scenes and us picking at each other and everything else. So
That never happens, Steve.
no.
But folks, if you're watching what's going on in the stock market, okay, obviously you might be concerned about it, and I want to address an article that's in Rolling Stones dated August 14th. So that was yesterday at 3:21, and it says the next recession is going to be brutal. The economy is showing signs of turning, and the people who saw the least benefit from the latest boom are now the most vulnerable ahead of the next big bust. And I would say I would have to agree with that statement right now. The market was down nearly 800 points yesterday, and it's very important to understand what's going on. Now, today's show, we're calling it the Wall Street Casino Wins Again. Let me be clear. I'm not trying to be funny. I'm not trying to be disrespectful. But when you have your money in Wall Street, in a sense, you are putting your money in the casino. And most people don't realize that they do that because you have 401ks. Most of the time, people have 100% in the market, or they decide to be defensive and they put 100% in the money market portion, and they get very little growth. So many of the people that listen to this show, and we talked about this before, in 2008 they lost a bunch of money. They said to their broker, or they said to themselves, I don't want to lose any more money, I'm going to put it into the money market, and they've made no gains in the last 10 years.
That's right. You know, the market this week actually lost, you said over 800, right at 800 points. That's more.
No, that was yesterday.
Yeah, well, yesterday. Yeah. It's come back a little bit. It's been all over the place. But my point is, just in that one day, it lost more than it did in 2001 and 2008. I mean, that was a significant correction. And yet, we've talked about this on the show too, that you kind of become numb to the fact that, you know, it's just 800 points. That was what was it, 3% or something? It was a pretty strong, pretty strong pullback.
Right, it has been. And see, here's what's going on, folks. And first of all, I want to let our listeners know you can reach us at 864-989-0176. 864-989-0176. Also, I want to let our listeners know that our office will be moving to 3115 Pelham Road in Greenville. So we have a Greer address, but the office is a mile away from you know where we've been at for the last 10 years, and we've moved into a bigger office where we can do some client workshops and things in our office. So we're really excited about that, and so again, keep this in mind and give us a call if you're interested to know what's going on here at the Prosperity Group.
So if you're a Greenville resident, we're going to be able to serve you better now because we have a Greenville address. And if you're in Greer, we're just down the road.
We're just down the road.
Even though it's a mile.
That's good. It sounds like a good
political.
Good jingle, Steve.
Yeah.
Good jingle. Okay, we're just down the road.
That's right, just down the road.
So folks, market watchers enjoying their first sip of coffee around 6 a.m. might have done a spit and take. For a brief period Wednesday morning, yields on 2-year Treasury bonds were higher than those on 10-year ones. A short-term investment was seen as riskier than a long-term one, and the return therefore higher, a signal that can portend major trouble for the economy. By the way, the last time yields inverted was in 2007 before the Great Recession. The 2 times before that also directly preceded recessions. The dynamic flipped back before markets opened Wednesday, but stocks nevertheless dropped amid fears of serious economic trouble. Now, folks, what we're talking about, and if you listen to our shows for any time, any length of time, I've said this over and over, and certainly did not invent this phrase, but sell high and buy low. Okay, had a person come and see us this week, and this lady who lost her husband, very nice person. Basically, she moved $500,000 of money into our firm and our strategies. All right, and she sold at the top part of the market. Now, by the time the transaction is done, she saw herself have a little bit of a hit. Okay, so I am telling you right now that business as usual, being in the Wall Street casino, could be riskier than it ever has been, I believe, in the last 40 years.
You know, you were talking about the yield curve inversion, and we've talked about it several times recently because it's a really big deal. Basically, the simple way to look at it is, if you're investing in treasuries, you would think a longer term investment is going to give you a bigger yield. Well, what happens is the shorter term investment actually turns out to have a bigger yield than the longer term, which screws everything up. And here's the point that I want to make. Actually, I'm reading from a New York Times article that was just out the other day, and it says inversion of the yield curve is considered one of the most reliable leading indicators of recession in the United States, having preceded every economic decline in the past 60 years.
Right.
If that's not enough evidence to show you that the economy is in real trouble, that at least on the horizon there's something coming, that says it right there.
Well, and folks, I challenge everybody that's listening to me right now, go read about what's going on in Australia right now.
Yeah.
Go read what's going on in that economy. Of course, China is in an uproar right now. And we are seeing a potential reset of magnitudious. That's not a word. We'll take
Magnanimous.
it.
How about
No, I like
magnanimous?
magnitudious. So we'll say magnitudious
A
proportions.
great word.
Okay. I knew a pastor. His name is Von McLaughlin, and he pastors a church in Jacksonville, Florida. And he came to my church when we were here in Greenville, and he goes, magnitudious, and I love that. I love that phrase.
All
Anyway,
right.
just saying. So I'll plagiarize that because I like him. He's a good pastor. So the fact of the matter is, folks, there is something on the horizon. You need to be paying attention. We've been telling people for the last 6 months to take a defensive posture. Don't get caught up in the greed game. So let's kind of look at this. First of all, you can reach us at 864-989-0176. Go to our website, mymoneyissafe.com, and understand, folks, that we can help you. We can show you strategies to protect your money, where you can get 50% of the market, up to 50% of the market with no risk. You need to be thinking about that. Interest rates are dropping. Things are changing. Now listen, we're almost out of time this segment, and I want you to call us, 864-989-0176. If you're on Facebook, I appreciate thumbs up and liking us. That's supposed to do something for us. I don't know. I let other
makes you
people
feel
deal
good.
with that. It just makes me feel good. So folks, stay tuned. We're coming right back as we talk about the Wall Street Casino continues to win. Facebook, we are now going to record a promo, and appreciate the likes and everything. Appreciate Tamara, Rhonda, and Philip. I hope your ministry is doing well. Monica, I hope you and Steve are doing great. And Brandon, how are you doing? And Bob and Miriam, always thinking about you and saying hello. So, and Melissa, how are you doing? And Carl and Julia. So appreciate everybody tuning in on Facebook, and appreciate it if you like what we're talking about.
And those of you that are tuned in on Security First Facebook, I'm just gonna say hi because I can't read that far. He's got his laptop. I can't see it. So
Steve,
welcome.
Steve.
No, that's for close. I don't have far.
Okay. We need to get you a telescope.
Yeah, no, it's
All right.
true. It's
All right,
true.
so we're going to do the
What's your
promo.
song?
Oh, the song. I'm going to put my wife's song, He Is Able.
He is-
And Facebook, I believe that Jesus is truly able, so we're going to put this song that my late wife sang back in 1988, made popular by a contemporary Christian band called Truth.
Right. Boom, boom.
Attention listeners, this is Greg Ellie of the Prosperity Group, and today's show we are talking about the Wall Street Casino continues to win. Listen, folks, don't get gambling fever where you're gambling away your retirement for a little bit more. This might be the right time to get a defensive posture and protect yourself. The good news is if you do what we're saying, you'll still make money, except your money will be safe and insulated from risk. Call me at 864-989-0176 or go to mymoneyissafe.com.
All right, very good.
So we've done our promo, and we're going to continue the show, folks, and love your questions if you'd like. Bob, how are you doing today? Thanks for joining us. I think that's Bob from Sarasota. Hope you're doing well. Okay.
All right.
Welcome back, folks. This is Greg Ellie of the Prosperity Group, and the song that you heard was a song sung by my late wife, Marie Ellie, known as, the song was called He Is Able. And, you know, folks, we're in a stage in our life. I turned 59 this year, and I lost my brother yesterday, unexpectedly, to, we believe, a heart attack, and I'm flying up to Chicago to take care of that. And, you know, I'm honestly, I'm tired of seeing people die, friends, family members. I really am, but it's part of life. And what we do is to try to help prepare people for that in so many levels. It's better to prepare to live right, but it's also better to be prepared to die right, meaning that you know where you go. So I believe that's so important. So again, I just want to share that with you because life does happen and it's painful. So listen, folks, I'm not trying to put a downer on the show, but this is stuff that we face with. We're faced with.
Yeah, the inevitabilities of life. I mean, that's we've talked about it. I love being able to be the person that comes in somebody's tragedy or somebody's really tough time in life and being able to help them. And that's what we plan for, because just like the economy, just like death, just like many things in life, those things happen. The economy is going to adjust. We're going to die. I mean, so we have to do what we can to prepare for our loved ones.
No, that's absolutely true. And folks, give us a call at 864-989-0176. You can email me at greg@mymoneyissafe.com. You can email Steve at steve@mymoneyissafe.com. And I had a client, this was a month ago, he passed away of cancer. And we had done a tax-free strategy for him that obviously we were planning on him living to collect that money as a living as income. Fortunately for his wife, though, the death benefit came in extremely important for her, because now she's able to complete paying for her daughter in college. And so as painful as it is, that really took a lot of pressure off of this person. So again, these are some of the things that we specialize in. But another thing that we specialize in is this. Do you have a 401k, you have an IRA, you have money in the stock market right now, and you're concerned about the up and down, 800-point drops. And folks, you just heard the article that we were referring to, and the article is in Rolling Stones magazine, and it basically says the next recession is going to be very, very serious. So it's important to understand how that works.
You referenced earlier that as far as the Australian economy, and I would like to challenge our listeners to go and do a little bit of homework on that. There was actually an article this past week that talked about the head of the Treasury over in Australia came out and said, we don't have any more bullets left. We don't have anything else. So they've done, they've lowered the interest rates, and if they continue to have to lower them because of the economy, at some point, that the magic of that's going to run out. And then on top of that, the quantitative easing, I believe that they've done some of that as well. We know we certainly have over here in this country. And so they don't really have any other options. And so if you look at it on a micro sense, Australia's in trouble. But if you just take that and put it to the United States and many other countries have done the same thing, the global economy is in real trouble because they're out of bullets.
No, you're absolutely right, and the problem, folks, is that there is a change, there is a shift coming, and I'm not trying to spread doom and gloom. That's not the intention. All I'm saying is look at the signs, look at what's going on. Okay, think about this for a second. For the first time in our country's history, we have seen an infusion of money since 2008, not only in our country, in the entire world, and it's been predicated by the Fed's dropping the interest rates to record lows, which is great if you've got a mortgage, but not so good if you're a retiree, okay, with certain instruments. But this has happened. And so what's happened, money gets infused in it, stock buybacks to try to manufacture a market gain. And you know what has been created? A bubble that's going to pop. Now, two things can happen. I believe that I don't know if this is the big correction that's coming. I want to tell you that.
Right.
I don't believe I just don't know. It could be, but I also believe that it's going to probably happen within the next year. And if it happens, I think it's going to be very, very serious. I think we're going to see people's lives turned upside down to a certain level. And so the best thing we can do is to prepare and to prepare and to prepare.
What's interesting is, we don't know if this is the big correction or not, or this is foretelling of it. But August typically is a really calm month in the market. It's not a volatile time in the market, and so for there to be this much volatility, it should be another sign that there really are some serious things going on.
Right.
And we mentioned Australia, the German economy. Part of several things that happened the other day, the German economy actually shrank. The reports came out for that. China came in and said that their economy was losing steam. There were several things, and of course the trade wars with China as well. There's several things that all hit at the same time and that caused just one reflex reaction. Imagine when something really big comes in and pops that bubble.
No, and see, here's the thing, Steve, that's amazing to me. And folks, I want you to listen to what I'm saying very carefully. Those on Facebook who are watching us and those on the radio who are listening to us, okay? Think about the logic of what I'm going to say. All right. If my company, Prosperity Group Advisors LLC, made made $1 billion, okay, that would be nice, okay. But let's say my company made $1 billion last year, and I'm a publicly traded company, and the following year my company makes $980 million. Do you know what just happened to the value of my stock? It just went down. But do you know what? My company made $980 million. That's not so bad.
Right.
So you see, the problem is you've got the mindset that the only way for the economy to make money is to go up. So folks, one of the defensive positions that we are taking with many of our clients is this. We have an account that can give you approximately 50% of the market gain without any risk of loss. So let's look at a scenario. Let's say the market crashes. Let's say it takes a 40-50% hit over a 2-year period. Then what happens is, let's say the Dow goes from 26,000 down to 13,000. If you're in the stock market, you're not making money again until you're back to 26,000 unless you sold. And let's say you didn't sell until the market got to 20,000, all right? Then you don't make any money till you're 20,000. But with our account, you would make zero, but now when the Dow hits 13,000, your starting point is at 13,000. So we could be in a decline market that comes back over the next 5 to 10 years, and you substantially make more money than you do by taking 100% of the risk. This is very, very crucial what we're saying.
Absolutely. And, for those people that are closing in on retirement especially, I'd like to offer, I guess I'm always the challenge guy, so I'm always giving homework. Maybe the listeners don't like me as much because I give a lot of homework, but I think homework's important as it comes to your retirement. Look at what your 401k or your IRA did over the last week or so, and especially that one day, that 800-point drop. That was a 3% change in the market. 2.93% was the correction. 2.93. So take that. Greg just said, what if the market corrects 50 or 60%? That is completely within the norm. Certainly 40 to 60% could be an absolute reality. So take that number that you lost, feel the pain of that for a minute, and then multiply that by a bunch to get to 40 to 60%, and then realize how much that number is going to be less. Now, if you've got an account that you've left, let's say you left your business and you've moved on to another company and you just left your 401k with that existing business, now is the time for you to take that money and put it in a position where it's safe. If it's still in the market, you need to take the risk away from that because of exactly what happened this past week. You need to give us a call and do like what we call a rollover and bring it to us.
Right, and it's called an in-service rollover.
Yep.
We have people that come to see us all the time, and what they do is they take their existing 401k, and if they're over 59 and a half usually, they can move that 401k into safety and still continue to contribute to the 401k. And as in the words of Bishop Von McLaughlin, that's magnitudes. So, anyway, you're going to remember this phrase,
Oh, mercy.
And the whole point is to protect your money, folks. It's to protect your money. Now, I want to point out something because this is one of the most amazing financial instruments that I've seen in my career. We've talked about this on a variety of times, but we have many people who are now starting to look at this very seriously, where you can take X amount of money, put it in for 5 years, and have a bank throw in money on that. They throw in money on that account, all right? And that means that you put in money and the bank throws in 3 times as much money. But here's the caveat. You have living benefits if something happens to you. And secondly, what ends up happening is that you have tax-free income in the future. I have a 29-year-old young lady. Her husband put her in a policy. She's putting in $21,000 a year for 5 years. At the age of 65, she'll be able to draw $160,000 a year tax-free. Do you think that might come in handy in the future?
That's awesome.
I mean, it's amazing. And people say, well, why would the bank add money? Well, same reason they do a mortgage for you, because they've got security. Same thing with this. The policy is the security.
And a lot of people would say, well, why in the world don't they put the $20,000 into, I don't know, real estate or into an IRA or something else? And the truth is, when you look at the numbers and all of the benefits that this package brings to you, it's just you're not creating. If you put it into an IRA, as we talked about before, you're creating a tax problem when you go to take it out. This doesn't create a tax problem. It's tax free. There's living benefits. There's dying benefits. There's all kinds of stuff that's involved in that. It's an awesome program.
And when you're talking about living benefits, folks, how many of you are concerned that sometimes the problem is not necessarily dying? Sometimes the problem is living with a physical ailment or a problem. With my wife, she had a policy like that, and we were able to get quite a lot of money towards her medical bills because I looked and I said $200,000. I spent $350,000 on her medical bills because of the way healthcare has gone, and she wasn't using the traditional type of healthcare. Gave her a great quality of life. But the fact is, folks, what we're telling you can be a great tool. Folks, we are out of time this segment. We're going to continue to talk about this. And so this is Greg Ellie of the Prosperity Group.
That's not supposed to happen because
No.
I saw you.
No, I do that all the time. Angela, would you do me a favor? Would you dial 607-2054?
Yeah, blah, 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 blah.
Let's see, I can get you.
Here, I'll just dial it.
Yeah, why don't you dial it? That way we're not
And
airing
folks
it.
on Facebook, sorry, but I've just had my brother passed away
Go ahead.
yesterday, and I've got family trying to reach me on the show that we're recording. So this is live on Facebook. So just letting my daughter know. Okay, it's ringing.
Did it ring or did it?
Would you do me a favor? Would you call while I do the promo? Would you call Robbie?
Yeah.
And tell her to call my daughter.
How do I don't know. Oh, call the office?
Yeah, 99,
yeah.
76.
Call over where at? Is there a phone out there?
Yeah, just out there. Yeah. Okay. All right, folks. I'm recording the promo.
You
Sorry about
need
the break there, but if you joined in on the show, you know we're talking about the Wall Street Casino continues to win. No. Just go on.
Yeah, I'll find a phone out here. That's okay.
Oh,
So we're talking about the Wall Street Casino, and so guess what? When you listen to our radio show, it's edited. On Facebook, it's not, and we're dealing with things right there. So, all right. So Facebook, I appreciate you joining. Tommy, it's good to see you listening. Frank and Grayson, all people that I know, I appreciate you tuning in. Nicole, it's good to see that you're watching, and Leonard and Fred, I appreciate you all joining. And let me know your questions or any comments that you have. And Robin, I would like to try to reach you very soon. It's been a hectic period of time, but and Bo, it's good to see that you've joined in. Okay, I'm going to do the promo and we continue.
let me get your song and then we'll do that. Yes,
All
sir.
right, the song that we're going to put in there is "I Need You," in the second verse, please. And Facebook, that's a song that my wife Marie wrote back in 1990. That it was on our CD. And pretty soon we're going to be able to have you, if you'd like to see or hear our music, to put some stuff online, and we'll let you know how to do that. All right. This is Greg Ellie of the Prosperity Group, and I really appreciate you tuning in today as we talk about the Wall Street Casino continues to win. How can you protect yourself? Folks, I've talked about bank-funded retirement, where a bank will add 3 times as much into your retirement as what you put in there. And in the future, 15 years later, you have the opportunity to draw tax-free money. Those of you with 401ks, learn how to add an additional 15% into your 401k and create income that's pension-like for you and your spouse.
I saw Steve went back that way. He got to a phone.
Yeah, that's fine. That's fine. I appreciate it. And all the folks on Facebook, I really appreciate you tuning in. And please give us a like if you're watching what we're talking about. This is serious, folks. There is something coming up in the market, I believe, in the next year, if not sooner. And I think it's something that you got to pay attention to before it happens. People, if you have 401ks, IRAs, you need to do something about it. Okay, we're almost ready to go.
I couldn't get through it. It went to answer service.
For the office?
Yeah.
Okay. Did you leave a message?
No, I didn't.
Okay. All right. Let's get back to it. We got how many more segments?
2 more.
Two more segments. Okay, Facebook, we got 2 more segments and we'll be done. Okay. Welcome back, folks. This is Greg Ellie of the Prosperity Group, and appreciate you tuning in today as we talk about the Wall Street Casino continues to win. Folks, you've got a 401k, you've got an IRA, and you have watched record highs with the market. You might have made money, you may not have. Okay, depends on your positions. But the reality is, if you're in a position right now to do what's called an in-service rollover, you need to call us, because we can add over 15% into that account. Another strategy that is extremely popular is one in which you're going to get close to 50% of the S&P return with no risk. Now, something I want to point out. People will say, hey, Greg, what kind of fees do you have? Okay, let me make it very clear. Our fees on most of the accounts that we recommend are zero in terms of fees that are coming off of your account. So if you've got a 401k, and let's say you've got a financial person and you're paying a point to a point and a half in fees, we just eliminated those fees for you. And listen to me, folks, I had several people with variable annuities that have come to see us. If you have a variable annuity, right now could be the perfect time for you to review doing something about it, because most of the variable annuities that people have when they come in and see us, they're paying 3 to 4%, 4.5% in fees. And in many cases, the variable annuity company makes more money than the client does with their account. But what they're told is, oh, you got this income account, so if you lose principal in the account, you can get the income. Let me ask you something, folks. How many of you don't care about your principal? Okay? If you got $200,000 in a 401k or IRA, we can protect that principal, and you don't have to pay a fee to protect that principal. If you have a variable annuity, in order to have that principal protected, you got to pay fees for it. Our income account, we can show you how to get a pension-like income that you and your wife cannot outlive and still leave something over to your kids. So this is things that we can do. So call us at 864-989-0176. If I sound like I'm speaking with an urgency, I am, because I think there's some things happening on the horizon that are very worrisome.
Absolutely. And I assume that was a rhetorical question about being concerned about the principal.
No. Who's concerned about the principal?
Right.
I mean, I spoke to a stockbroker the other day. He said, oh, my clients that have variable annuities, they don't care about principal, they just care about income. And then I asked randomly, so, hey, let me ask you here in radio land and Facebook land and all that, how many of you don't care about your principal? You're willing to substitute your principal for income. Okay? If you are, email me. I challenge anybody to email me and tell me if you are. We need to have a talk.
Hey, I'm the one that does the challenging, not you.
Okay.
Don't take my job from me. It's the
catchy.
one thing I hold on to.
It's catchy.
No, but you're right. You know, and what the things that we talk about here, the good news is that we do have income opportunities, but we also do protect the principal. And so we have literally the best of all worlds. We really do. You get to participate in the gains in the market with no risk. You get to, have your principal there. You get to have the income side of it, and there's no fees. With most of the products that we talk about, there's absolutely no fees. So if you put $100,000 in, $100,000 is represented in your account day one.
Not only that, Steve, in some cases they put $100,000 and they start out with more money.
That's right.
So folks, again, people will say to us, well, guys, why doesn't everybody do this? And I have to agree with them. Why doesn't everybody
That's a good
do
question.
this? I mean, we'd really be busy, right?
Yep.
But no, truthfully, this is available. This is nothing new. But these strategies are a great way to protect your account. And it's very, very important to understand how that works.
And there's nothing wrong with being in the market. We certainly... we participate in the market in different ways as well,
indirectly.
But it's a balance. Well, I'm talking about personally, but there's a balance, and we talk about foundation on this show all the time. That your foundational money needs to be what we call your no-sell money, the money that you absolutely know, no matter what else happens, whatever the economy does, whatever China does, whatever Trump does, whatever happens, that money is going to be there for you in those times of need and in those concerns, and so. That foundational money has to be protected, and that's the money that we start talking about to begin with, because so many people have their foundational money all in the market, and it's all at the whim of the market at the Wall Street casino.
So Steve, are you telling me that the money that one has in Wall Street is I hope so money, right?
Well, absolutely, yeah.
So I hope it goes up.
I'm
right?
rolling the dice, baby, rolling the dice in the casino.
Rolling the dice in the casino.
Yep.
And what are most people told when the market takes a major correction?
It'll come back. It'll come back.
Okay,
Don't worry.
just a little history. It took 24 years for the market to come back after the Great Depression, just saying. So if you're 60 years old and the market takes a hit, is it going to come back in a year? Is it going to come back in 5 years? Here's the thing, Steve. With all of that QE money, all of that money that's been put in there, we don't know because it's changed the dynamic. It's changed the potential market cycles that we've seen. This could be one of the longest bull market runs that we've seen.
That's right, and
You know,
Jim
10 years.
Jim Cramer's going to go out of business because he's going to keep telling people to buy. If you look at the fundamental, let me back up. If you're a regular listener on this show, you know we talk about the fundamentals. We talk about the things that are behind the market, right? The quantitative easing, the derivatives. I mean, on and on and on. There's so many things that are fundamentals. You just talked about the market taking 24 years to come back during the Great Depression. The fundamentals now are so significantly much worse than they were back then. And we just told you at the beginning of the show, if you didn't listen or weren't able to hear the first segment, go back on Facebook and watch it. But where we are right now, the indicator of the inverted yield curve is an absolute, for the last 60 years, has been an absolute accurate predictor of a recession coming. So if nothing else, the market is about to turn, it's about to correct. If you've got your money in the market, if you are rolling the dice, baby, you're all in on red and you're coming up to retirement, now is the time to take your chips off the table and put it in something safe. How's that for tying all into the casino?
It's very true, and I'm going to do a little Rush Limbaugh on my hand.
Uh-oh.
You hear that right there?
That's not a golden microphone.
No, it's not a golden microphone. I don't do as well as old Rush does, but this is an article that's in CNN Business. It's by David Goldman, and it says, and this was updated Wednesday, August 14th, and it said Dow tumbles 600 points after bond market flashes a recession warning. And it says, here's what happened. The 10-year Treasury bond yield fell to 1.6% Wednesday morning, dropping just below the yield of the 2-year Treasury bond. It marked the first time since 2007 that 10-year bond yields fell below 2-year yields. U.S. stocks fell as investors sold stock in companies and moved it into bonds. The Dow was about 2.4% lower, the S&P was 2.4%, and the NASDAQ composite sank 2.6%. Now listen to this. CNN's Business Fear and Greed Index signal investors were fearful. The VIX, the volatility index, spiked 20%. So folks, there is some fear that's going on, so you have to be prepared. But let me say this to you folks, okay? The Dow lost 800 points yesterday. It's up 90 points today as we're recording the show. And if tomorrow it goes up 400 points, everything's okay. Get back in the casino and don't worry about it. Just keep taking the same risk that you're taking.
Nothing to see here, folks. Keep moving. Keep moving.
And what we're trying to say is this. I'm going to give you a formula, folks. I'm going to give you a formula. It's called the Rule of 100. And guess what, Steve? We printed up a new risk pyramid to show this to people. And if folks want to find out their risk pyramid, they need to give us a call at 864-989-0176. I see some folks from Florida that have been watching our show. Give us a call at 1-800-440-0434. We're licensed in Florida, Tennessee. I even saw someone from Tennessee right there, and North Carolina and Georgia. So give us a call. All right, so here's my point, folks. The market may take a tumble. We don't know. What do you need to do about it? Should you protect yourself? Or should you think, oh no, it's going to keep going up? And it's called irrational exuberance. That's right. Irrational exuberance. You know where irrational exuberance happens most? At the roulette table or the blackjack table, okay? Or I'm playing poker. And I don't even know how to gamble very well, folks. I mean, my experience in gambling consisted of me going to Wall Street. I'm sorry, that was a Freudian slip. Okay, going to Las Vegas and telling myself I'm going to spend $100, see if I can come out ahead. I got up to $160, and you know what I should have done? I should have quit while I was
Walk
ahead.
away, brother.
I didn't walk away, and I ended up with nothing.
Yep.
But I ended up with an education, so it was very valuable. I won more than anything else there because I learned never to do that again.
It hurt too much, right?
It does hurt, and no one likes to lose money. So
It's the greed factor, though. You know, you were winning. You're going to keep
that's
winning.
right. That's right. It's just going to keep going up. The
That's
market
right.
will keep going up, folks. Understand, if you see casinos, the casino always wins. I played tennis at a house owned by a cardiologist in Reno, Nevada. I thought it was the highest house on the mountain. I looked up and I said to them, "Hey, whose house is that?" He goes, "Oh, that's the owner of the casino." Okay, get my drift there? So, folks, give us a call, 864-989-0176. We'll be glad to help you. This is Greg Ellie of the Prosperity Group. So, Facebook, we're going to do another promo. We've got one more segment. Love to hear your comments. I see a lot of people are joining in. Larry, it's good to see you. Mamadou, it's good to see you. Lori and Dick. Lori, I hope you're doing well. I see a lot of people that I know and I haven't talked to in a long time.
Your last song.
Last song. Okay, this song by Annie. Let's use Wurlitzer. And we're going to do a promo, and the song that I'm playing is my daughter's song that she wrote when she was 13 years old, called Wurlitzer. Folks, today you've been listening about the Wall Street casino continues to win. Don't get caught up with what we call irrational exuberance. Learn how you can add over 15% into your retirement account day one, or learn how a bank can add 3 times, that's over 30% into your retirement account. Learn about tax-free strategies, learn how to protect your IRA or 401k. Just simply give us a call at 864-989-0176 or go to mymoneyissafe.com. All right, you want to do one more?
Yeah, the one
Okay, so
after.
we're going to do one more segment. And those on Facebook, I really appreciate you tuning in. You know, give us some love, give us some thumbs up, and let us know if you like what we're talking about. And if we can help you, give us a call.
Do your last promo that went after the show.
Right.
Okay.
Folks, we want to thank you for tuning in today to the Prosperity Hour, where we teach you how to prosper during retirement. If you want to learn how to get your own prosperity plan, give us a call. Take advantage of this today before the Wall Street Casino runs away with your money. Give us a call at 864-989-0176. Go to our website. Our new office is going to be at 3115 Pelham Road. We're going to have a client welcoming session there. We look forward to seeing you. This is Greg Ellie of the Prosperity Group.
You mentioned the VIX. I wanted to make a point on that.
Yeah.
At some point.
Go ahead. Helps your breathing.
Yeah, it does.
Yeah.
It smells nasty.
The VIX index. Boy, VIX used to help me when I was a little kid.
I hate that
Just
smell.
last year.
Yeah, I hate that smell. Yeah, right.
You didn't catch that, huh?
Okay. Big baby.
See, folks, I'm at the stage of my life where I'm youthening. I learned that phrase from Joe Pesci, okay? The Utes. So I'm youthening, which means instead of being 60, next year I'm going to be 58. Year after that I'll be 57.
That's
So-
de-evolution, isn't it? So you're
De-evolution.
You're de-evolving like Devo.
No, it sounds like a wrestling team. For all our WWE.
Right.
Okay.
All right. Here we go.
Welcome back, folks. This is Greg Ellie and Steve Lewis. And if you want to find out what we're like off the air doing Facebook,
Maybe you don't.
maybe you don't, but you can go to Facebook at Prosperity Group at facebook.com, something like that, and you can listen to us. But seriously, folks, if you have a 401k or an IRA, you need to be smart right now. You don't need to get caught up in the greed game. You need to make the right choices. Let us help you in that process. Let us help you protect your money. Don't get caught up in the greed game. I'm serious. Give us a call at 864-989-0176. Steve, you were talking about the VIX. The VIX?
Well, yeah. You were talking about the VIX indicator, and it actually went up. You said it went up 20%.
Right.
And that's a fear indicator. And so I want, that's a really important indicator. And I wanted people to understand that, the market, a lot of the market is perception. You know, if you remember Wall Street, the movie Wall Street, Gordon Gekko, and
Yeah.
you know, he was talking about perception was reality, and you know, this painting. He's talking about this painting, and if people perceive it's worth more money, they're going to pay more money. Well, that's what the market is all about, and so. If the VIX indicator tells you how scared people are of how unsure they are of the stability of the market, and so if they're afraid that the market's going to go down, they're more likely to either be more conservative in their investing or they're likely to pull the chips off the table, so to speak.
Right.
And what happens in that situation? So if it goes up 20%, you've got a ton of people that are saying, I'm out. Well, guess what? If they're out, they're selling. Guess what happens when they sell? Markets go down, prices go down, and then it starts this whole spiral thing where it's back to the lemmings. You know, you see a couple of lemmings run over the cliff, and then everybody else starts running over the cliff too, and then before you know it, you've got a snowball. So take away all of the fundamentals that we've talked about today, and just the VIX indicator in and of itself should be enough to rattle your cage and say, you know what, we need to pull the chips off the table. It's time to be safe.
Okay, Steve, what you said was well said. And here's the thing that we talk about. We talk about the risk pyramid.
Right.
I re-implemented showing people the risk pyramid because it shows you a picture of how much risk you are really taking.
Yep.
All right?
Mm-hmm.
So let me tell you what it's called. It's called the rule of 100. If I'm 65 years old, all right, I should have no more than 65% of my money at risk, which means 35% of my money should be safe. 9 out of 10 times
I
when
think you said that backwards, my friend.
What?
Yep, 65% should be safe and 35% should be
No,
in the market.
no, I didn't say it backwards. Because everybody that comes to see us,
That's how they
do
think,
the
okay.
reverse. In fact,
You totally got me there. I'm
well,
sorry.
Okay, yeah, you know, that's right. That's why they pay me the big bucks.
That's right. That's right.
So,
Yeah.
No, and I'm being facetious, folks, because the risk of 100 says that 65% of my money should be safe.
Right.
35% of my money at the most should have some risk. The reason I said that is the lady that came to see us, she decided to move $500,000 of her portfolio, and she was at 70-30. She had 70% risk, 30% safety.
That's crazy.
And well, but it's not her fault because this is what's being promoted out there.
Right.
All right, folks, look at the news. When you're watching a golf tournament, and I don't know if you watch golf tournaments, when you're watching a golf tournament, what do they show you? They show you this nice-looking elderly couple on the beach, going on a yacht, retiring because of the fact that all of their money's in the Wall Street casino.
Yeah.
The problem with that strategy is you could get the yacht repossessed.
Yep.
So, folks, be smart. The rule of 100 says you're 70 years old, 70% of your money should be safe, 30% should be at risk. Right now, that is very crucial. If you want to find out how much risk you have, you can go to our website. Keep in mind, we're going to be changing it very drastically, so it's important to understand that.
You know what I like about the pyramid picture? So if you're driving or whatever, picture a pyramid in your mind. Well, a pyramid is a triangle, right? And the base of the triangle is very solid. How likely is that pyramid to tip over? It's not going to tip over.
Because there's a solid
There's
foundation.
a solid foundation. Now, if you take that pyramid and what you were talking about a minute ago and invert it so that you actually have more risk at the top than at the bottom, now the base, where the base should be, is actually up in the sky. How likely is that to tip over? It is incredibly likely to tip over. You just tap it with your finger and it's going to go over. That's what we try to prevent against, is that tipping over aspect of your retirement.
Unless you're a trapeze artist or high wire walker, then you can do that, right?
That's
and
right.
So all of us can do just what a trapeze artist
Absolutely.
or so we can stand on our hand on the wire and not worry about falling.
I think I just pulled my back just thinking about that.
Well,
as you get older, man, it doesn't take anything to pull your muscles, right?
Okay, speak for yourself, young man. So no, what we're saying, folks, is, you know, the Bible talks about having a firm foundation. It says you build your house on the rock, and when the storm comes, it doesn't get washed away.
That's right.
And by the way, for our Facebook listeners, we started. I did a Facebook Live last night, and if you want to look at it. On my personal thing, and we did a Bible study on discipleship and things like that, which is very important to me. And we're talking about, we're going to be doing that pretty consistently right now. We're going to be doing some of that out of our new office, and hopefully I didn't offend anyone because it's still the United States and I can talk about Jesus proudly. So
That's right.
Anyway, just wanted to include that. I want to put a plug for our Savior.
Well, absolutely. I mean,
You
that's a big part of who we are, and yeah. So I'm with you 100%. And if you just listen, even if you don't listen to the spiritual side,
excuse me,
yeah,
that's not a sales pitch, folks.
No, that's not.
That's from the heart.
Absolutely not.
And that's more important to me than this. Okay.
Oh,
so,
absolutely.
but
I mean, there've been many times on this show where we stopped talking about the market and everything else. We just talk about the Lord for a while, and that's what I love about this is because it's not lip service. We actually we live it and we breathe it and we believe it. But I was going to say, even if you're not a believer in Jesus, even if you just listen to a lot of the philosophies that he threw out there, one of them being, building your house on a foundation, they're so true and so applicable in your life. And of course, that one is a great analogy for retirement because of everything that we've said. If you build your foundation correctly, your house is going to be there no matter what storm comes. And that's what we represent.
That's well said, Steve. And I want to encourage our listeners to take advantage of our free consultation. All right? Take advantage of our free consultation. Okay? I'm getting ready to fly out to Chicago. Now, I'm flying out before the show airs because I lost my brother yesterday. And the week that I lost my wife, I had to put my mom, who was 95 at the time, my brother, who was 72, and my other brother, who was 69, in a nursing home. And my 69-year-old brother, who passed away yesterday, was bipolar. He was doing really good. He found medication that was working, and he would call me up, and he sounded like a happy-go-lucky kid. And I got a horrible call yesterday that just broke me. And so, life happens, folks. You've got to be prepared. You've got to be prepared. You have to protect yourself. You have to protect your families. You have to do what's smart, and you've got to use wisdom with your finances. I'm so proud of what we do because I don't ever have to call up a client and told him he lost 50% of his money or 30% of his money. I had a client ask me yesterday, he said, Greg, so you tell me if the market crashes, I don't have to call you. I said, unless you want to. I said, but no, you don't have to because your money's safe. And that's the key. That's the key pinnacle of what we do, folks. We're showing you ways to protect your money, to protect your family, to have a tax-free strategy where you have living benefits. It's crucial for your family, folks. It's crucial.
And I said this a little bit earlier too, but on the worst days of your life, whether the market tanks or you lose a loved one or whatever, on the worst days of your life, those are the times where we get to bring, and we're certainly not going to, bring sunshine to your day, but at least we take some of the darkness away and take some of the cloudiness away from your day. And that's what I love about what we do. I just love it.
Steve, we're blessed because we get to help people. Absolutely. And so many of our clients are a blessing to us, and hopefully we're a blessing to them. It's important. And I'm going to draw this scenario, folks. I want you to think about this for the last segment of the show, okay? Let's say that you're watching the news, you wake up in the morning. I remember 9/11, when I woke up on 9/11, I saw that, and I was so mad that by the time the second plane hit, I wanted to rejoin the military, and my hip would not let me. I was serious. I was willing to go back in.
Wow.
And the thing is this. So I wake up in the morning, all of a sudden the Dow's dropped 1,000 points.
Mm-hmm.
All right? So now the Dow's dropped 1,000 points. I go, that's not good. By mid-afternoon, it's dropped 1,800 points. By 3 o'clock in the afternoon, it's down to 2,100 points, and Wall Street stops and said there's a problem here, so they shut it down. Okay? Now people are starting to get edgy, they're scrambling, and so guess who's got first dibs, Steve? It's not the average American. It's all of these high-tech computer companies and hedge funds that can get these orders placed. So now let's say the Dow goes from 26,000 and it's dropped to $22,000 by the next day. Now people are scurrying. And by the time you get out of the market or you get to change a position, it's down to 19,000 points. How do you feel right now with that, what I just gave you? But let me give you another scenario. Let's say that this happens, but you got 70%. You're 70 years old. You got 70% of your money in safety. your only risk is the 30%. So if you're worth $1 million, yeah, you might have lost $150,000, but that's a whole lot better than losing $500,000.
Absolutely. And, you know, some people may say, well, I have a stop loss in place. So, you know, if the market goes or my stocks go down to X, I'm going to get to sell. I've got the stop loss. Well, the stop loss is there to trigger. It doesn't mean that that's actually what happens.
That's what you're going to get.
Yeah, it'll sell when it can sell
When
after
it
that
can.
point.
And that's the concern
That's
that
right.
I have. Folks, we are out of time. We really appreciate, we had a lot of Facebook attendance this week, and we appreciate all of our listeners that listen to us. Folks, if you've been listening for a while, give us a call. This might be the right time to do it. Call us at 864-989-0176. Go to mymoneyissafe.com. Folks, God bless you. Have a great day. This is Greg Ellie
And Steve Lewis.
of the Prosperity Group. Thanks for tuning in.
Thanks for tuning in on Facebook. We did really have a great response today. That was awesome.
Yeah, Facebook, I really appreciate all the listeners and the people that tuned in.
Yeah.
And if you want to give us comments or email, you know, I appreciate that. I saw a lot of likes here, so, you know, I really appreciate you tuning in. Take care and God bless you, folks. Go to our website, which is mymoneyissafe.com, or call us at 864-989-0176. If you're out of the area, call 1-800-440-0434. That's 1-800-440-0434. Take care and God bless.